I see you over there and I salute you, my baby doll baby cakes. Did you know there was an internet tech bubble in 1999 and it's very relevant to the cryptocurrency cycle we have today? The internet tech bubble occurred when interest rates were over 5%. It shocks everybody when I tell them this because crypto has gone up so much on 0% rates and infinite QE. So you would expect a tech bubble which had people buying the most Ponzi of Ponzi companies you could ever imagine. I'm talking PE ratios of 2,000. That means these companies were so overvalued it would take 2,000 years to pay for the valuation of the company. That's how high their market caps were. Yes, market caps do matter. And it actually hit up that point and then poppity pop. All of this happened in this red arrow here. And I'm going to prove it to you right now. You see this Nasdaq? Now this is the God run. This is a God run of all God runs. I mean, you take this 10-year return. I mean, you poppity pop. This is a freaking index. 2,200%. The internet really did change the world. Make sure that your posture is very straight. You know, the Nasdaq went up so far. There are companies, and don't be scared, there are companies that still have not reached the valuation of what they were up here. One of those companies is called Cisqo. Have a look at this. Isn't this fascinating to see? Cisqo is still not up there after 23 years. But I mean, you have a look at the parabola that Cisqo did. I mean, it's absolutely phenomenal when you look at it. Wow, what a run. I mean, oh my God. 912x on your money in a straight line. No wonder. You have to marvel at this. Look at this. Look, do you want to know what happens, friends? You know what happens. When the markets go up, if you have too many weak hands, they don't get rinsed. And when they don't get rinsed, they are dead weight at the end tail of when it finally implodes. And if they are there, you ain't never going up for a long time. If you want to get the ruler out and see, the biggest collapse that Cisqo did was this tiny little 50% drop in 1995. And then you had this little one here. It did 34%, 38%. Now they're huge for a stonk. But can you imagine this going up 912x? I mean, if you go down and look at a regular chart, it probably looks like it's over. Imagine you're in this. Imagine you're in an altcoin. Let's say you got in here and you see it up here. You're like, oh my God, I'm up 8x. Time to get out. And then you just watch it do this. Oh my God. Well, I mean, just is fascinating to see. And it still hasn't come back there. So that just kind of shows you the level of the bubble that we witnessed with 1999 tech stocks. That's why it's fascinating to see that this happened all with 5% interest rates. I'm going to zoom in right now. Now, the interest rates, they don't do the jobs that most people think. Most people just think interest rates up, everybody goes to zero. And then interest rates down, everything flies up. On average, yes, but it's more nuanced than that. It's just about the average level of rate and borrowing that people are doing to conduct business in the economy and the new price that they're going to pay for expansions. That's where it comes from. And so it's part of a cycle. It takes time for the moves to happen. I mean, you can see this actually hiked rates above 6% and then it had to reverse it all the way down. That's why, friends, don't believe these central banksters. And I'm going to have to use the S word, scum. They're scum. They're the puppet masters. Don't believe them. Look what they did here. Do you see what they did here? They pushed rates from 5.5% up to 6%. What do you think they were saying up here? You know, funny enough, I actually do remember the monetary policy minutes that was going on around this time. They were talking about, well, you know, we got to get inflation. Don't worry about this tech stuff. Everything's fine. There's no risk at all. That's what they were saying. It's spooky because it's actually what they're saying today. Okay? They're saying, nah, don't worry about inflation. We got to curb inflation. Things are bad. And look what they had to do. They literally, like dogs, you know, when the dogs get hurt, they put their tail between their legs and they walk back. Well, this is exactly what happened next. The rates got cut from 6.5% down to 1.5%. Bang! They had to reverse their whole course. I bet they regret having 5.5% interest rates for such a long time there. So this is what happens in the world of cycles and markets and financial assets and pricing. And because they're trying to thread the needle here, because they have totalitarian control and they can't see the future, well, really, They can see the future, but they can't let you know that they see the future. So after we've gone through this journey of discovery to see what happened back then, can we apply it to today? And I think the answer might be yes. I have the total altcoin index here, and this nice yellow line fractal is a fractal of itself from the previous cycle bear market. And if you draw a horizontal distance of how long it took to reach the high again, it's about 1,150 days-ish. If we draw that time of when we should be cranking, it puts us at about June 2024. If we want to be conservative, we can move the top that happened in 2021, and instead of happening in Dogecoin Mania, which was, by the way, the real top, we all know that was Euphoria retailer top. We know that, right? But if we want to go down to the scam top and we move it to the right, well, it won't be June 2024 anymore. It'll be shifted to the right by about 6 months, and then we're going to find out that it's about, November, December 2024. So at least we have a window. That's a good thing to know. At least we have some sort of time frame to know, okay, if we are moving up by then, something's wrong. Something's wrong, So what can you really do here? You already know. We take a long-term view. You DCA your bags. If you are already packed, chill out. There's a party emoji here for you. I'm here to calm you down. And I'm also going to put a little banana emoji here just to show you a sign of peace and comfort and tranquility. At the end of the day, we can't do anything. If you are maxed out, that's all right. That's part of markets. Part of markets is just saying, hey, man, you're all a scam and a greater fool theory, Ponzi, piece of trash. Why aren't you going up? That's part of markets. The only difference is some people, when they say that, they click sell and leave, and they come buy back higher when it's going up, right? And they're obviously paying a much higher premium price. For the rest of us, sitting around, chill out, take a deep breath. Don't forget that posture. You got to keep watching that posture, and just think, eventually Christmas is going to come, January, February, March of 2024. If you are lucky to have been given a pay rise at work, maybe you found another item around the house to sell, maybe you got an extra job, maybe you got a pay rise, promotion, whatever it is, you come across extra cash, maybe you got some money released, maybe you sold your second car, you got some sort of deal. Keep your mind open. If you get anything spare around there, please don't look at what we went through as a sign of the future to come, because you can't take what we went through as gospel for the future. What you've got to do is, if you come across extra cash, it's going to be really good to deploy, because you're probably going to have a very short duration on it. Most people are probably just going to be starting to punt, throw things around. It is what it is. Now, that's if the cycle keeps repeating. If it doesn't keep repeating, then we're on our own anyway, and we have no idea what the hell's going on. So we're just trying to navigate the dark as best as we can. So I've shown you that cycle, that period of time, and notice how I had nothing to do with interest rates, because this is something spooky and eerie. Because why did I show you this? Why did I show you that the tech bubble happened with over 5% interest rates? It's to share with you that it's not so cut and dry. It's not so black and white. It's not so clear where it's just like rates down, everything goes up, rates up, everything goes down. It's more about cycles. There are patterns of behavior where people store cash. There are patterns of behavior where people get into a frenzy. We want to start buying stuff. We start squeaking around on our chairs. We start eating pancakes. Those types of things happen, and it catches on everywhere. They seem to happen over time. You just got to be ready when it does happen. So I'm here to reiterate to you, the interest rates don't work in the way that most think. Even Warren Buffett will always say, don't try to buy stocks or bet on where the Fed's taking interest rates. You're just going to get screwed over time. You got to leave them independent. But I know, what are most people going to do? Most people are going to look at 2021 and they're going to say, man, next time they hike rates, I'm getting out. I have a sneaky suspicion the next time they hike rates, there's going to be a stalling period and we're actually going to go up again. But that might be a very fast cycle away from here, and I hope that you've all retired by then, so we'll be in better times. Don't forget, I also added here, if people want to degen, they're going to degen. It doesn't matter what the interest rate is. It could be a new technology spark. Look what happened with Friend Tech, for example. Out of nowhere, everyone just says, oh, wow, come and join my Telegram, show my boobies and my feet. All this type of stuff, that's the potential, the unlock of crypto. There's going to be more iterations out there. People are solving stuff. There's just so many dudes and dudettes with pens in their front pocket to ignore. And I'm going to read a comment here from Sir Jonny B. Sir Jonny has lost his marbles. John says, what's the tech bubble got to do with crypto in 2023? Well, hopefully, Jonny, you watch this video. I hope you're following me. Yes, you are. You are going to watch this, okay? He's asking me, are you saying historically there was an event where new on-the-scene tech stocks were bullish and interest rates were high, therefore high interest rates are not a factor now? 2000 compared to 2023 is a totally different set of macroeconomic and global conditions. Sir John, I'm going to let you know, no, it's not. It's part of the cycles. It's actually very similar. New emerging tech. We are the younger generation coming in. And if you're grandma or grandpa, welcome. If you're a boomer, you're welcome too. You are young in spirit and young in heart. You have enormous vigor. Thank you very much. Welcome. Join the Ponzi game. You're always welcome here. Also, ducks and squirrels included too. Yes, it's all related. You just saw it. People throw out valuations, but there's a difference. In the stocks, there's a different meme. You see, the stocks price themselves off cash and cash flow. Price to earnings, PE. P for friendship, E for earnings. Price to earnings. We don't have that in crypto. I don't know why. We are a network. It's a different meme. We don't have the cash flow meme. We don't have it at all. We have Metcalfe's Law, ML. We have the network. We are different. All right. Now, are we really different? Not really. It's more like the market's adapted. The market says, you know what? Don't worry about the cash flow today. Just get the people in. If you get the people in, we'll value you, we'll value your asset like you were able to get cash flow. Because the most important aspect of all of this is to get the people. If you can make everybody congregate, you are the winner. And of course, that's what we see in crypto. That's how we see Bitcoin, Metcalfe's Law. Bitcoin now has 200 million users. Ethereum has 500,000 daily active users. Cardano has 50,000 daily active users. I know these off the top of my head. Doge in 10 years grew from 400,000 wallet holders to 4.8 million. Hex, for example, started with 5,000 users, now has 150,000. Pulse Chain has 9 to 10,000 daily active users. I know this off the top of my head. This is the game. You got to know this. The price to earnings, nobody cares about cash in crypto. So there are some differences, but also these similarities, you got to take it on board. The most important part to think about are those interest rates. The decisions we make have nothing to do with those macroeconomic factors, despite what the analysts are going to tell you. Analysts has anal in it. They don't make money off investing and holding. They make money off their newsletters. They make money off sounding smart and appearing on TV, and they put makeup on, and they shave, and they wear a suit, and they pretend to you like they know what they're talking about. They might know what they're talking about, but they're terrible speculators. Because speculation and investing is not about what's going to happen next. It's about what is everybody positioned for? What are the weakest hands positioned for? That's what the game of speculation is about. And what better way than to end it with this? Chris is telling me to bring it. Thank you very much. And D'Artagnan 8, you are a warm apple pie. Thank you very much, fans. Make sure you like, subscribe, bell button, all to mom and dad. We love and appreciate them. And yes, warm apple pies are welcome here. Catch you in the next one.